We did see a little pump this weekend, but I always say that you shouldn't trust a fart, you shouldn't trust a drunk erection, and you certainly should never, ever trust a weekend pump. And that's exactly what happened this morning. After the weekend pump, things came back, and everyone was talking about crypto winter again. And when I say everyone, I mean everyone. I mean, look at this. So crypto winter, the first thing you do, you switch on. It says how to cope with this crypto crash, and that's Doug Polk, crypto. Then you got Sheldon Evans coming out and saying crypto winter, what investors need to know. And then you got Coin Bureau coming out with their video saying the start of crypto winter, what do we need to know? George is talking about trouble for Bitcoin this week. You've got Bloomberg even writing an article. If you look at Bloomberg writing an article, and the Bloomberg article, crypto winter, fears chill, the battered Bitcoin faithful. So everybody is talking about Bitcoin crypto winter. That's what everyone's talking about today. And of course, look, it's no surprise, because if you do look at Bitcoin and you do look at where we came from, I mean, we always say you should just zoom out. But if you look at the top, let's go all the way to the top. In fact, let's take this down to a daily chart and go to the top. You see that we've been actually in a downward market since about the 11th of November. The Bitcoin all-time high was the 11th of November. And we've been in a downward market ever since then. So you got the whole of November, the whole of December, and now pretty much all of January. So we've been in this downward market for 3 months almost. We've been in this down market for 3 months. So the questions aren't whether or not we are in a crypto winter. We're definitely in a crypto winter, but the questions are more, how long is this winter going to last? What you can do to protect your portfolio. Are there any hedges that can actually protect your portfolio where you can actually make money? Is it safe to start buying? And most importantly, how do you protect your profits? How do you protect the profits that you've got left? How do you make sure that you don't lose them, but still ride the market? Those are the important things that we want to talk about today. Then there's a few other stories that I really want to touch on today. We do need to talk about the time, Wonderland, Spell, FUD, recovery, and what's going to happen next, because that was the easiest trade of the weekend. Question is though, is there actually a trade? Is there still another trade in that whole subset of tokens? Then we want to talk about Luna, because Luna's not having a great time. Is the FUD actually anything to worry about? That's another thing. And then we're going to talk about NFTs and whether or not the NFTs are the ultimate crypto winter hedge, because if you look at the NFT numbers are shooting the lights up. OpenSea has had its biggest month, most NFTs sold. Big question is whether NFTs can survive this extended or unextended crypto winter. So that's what we're going to talk about today. It's going to be a massive show. Make sure that you stay tuned till the end. We're also going to be doing some of our giveaways. When we get to 5,000 likes, I don't know. Do you want to get up? Do you want to get up on a day where, again, the Bitcoin market is kind of like let us down? I mean, you want to get up on a day when the market's let us down? I don't know so much. We're having such a good weekend. If you look at the 4-hour charts, we were having an incredible weekend. Bitcoin was touching 39,000. And now all the way back down again, back to 37,000. And that kind of ushered in what everyone's now calling the crypto winter. So we're going to talk about the crypto winter today and how to survive the crypto winter, how to protect the profits in the crypto winter, how to make sure that you come out of this crypto winter alive. We're going to be asking some big questions. How long is this winter going to last? How do you protect your profits? What are you supposed to be doing? That's what we're going to be talking about today. So if you're new to our family, welcome. Subscribe to our channel. Join the movement, join the Banter fam. Sheldino is right here in the other studio. Sheldino.
Brother, what's happening?
So good to have you back. So good to have you back.
Have you got no more beard?
I've got no more beard. It's the end of the beard market.
I love it, brother. I need to get rid of mine.
Get rid of it and we'll usher in the new market. So Banter fam, welcome. Today, remember today we are going to be doing a lot of giveaways. We do have the Bybit giveaways. We'll talk about that in a sec. We're going to talk about the Luna chart, because that Luna chart doesn't look very good. I want to show you. In fact, Sheldino, maybe you can call up the Luna chart for us. Can you call up the Luna chart for us in the meantime? Let's talk about that Luna chart and see the FUD. Oh, has it broken trend?
It has broken a long-term trend for a while. It's just important to see if we break back in or not, but it has. So I'm interested to see what you're seeing on the fundamental side, because we are starting to show some weakness on the chart side.
Amazing. So we're going to talk about that. We're also going to talk about this. We're going to talk about OpenSea and the OpenSea numbers. Look at that. Those are the OpenSea numbers. And that kind of talks about whether or not the OpenSea numbers or the NFT numbers can actually back this trend of a bear market. So if you look at the OpenSea numbers, the numbers are increasing and increasing and increasing, and they're selling more and more and more NFTs at the higher and higher and higher and higher prices. If that's the case, well, then maybe NFTs are just the ultimate bear market hedge. We also got to talk about that. Because I think a lot of people have a lot of expectations for NFTs, but today, we're going to dig into the actual fundamentals and find out whether those things are justified. What else? Anything else? Or can we get on with the show? I think we can get on with the show. Definitely. Carl says we can definitely get on with the show. All right, so then we can definitely get on with the show. And I think the big thing we need to talk about is we need to talk about this crypto bear market, crypto bear cycle, crypto winter cycle. Oh, no matter where you look, it's all about the crypto winter cycle. So we thought, we would do exactly the same. If everybody else is talking about the crypto winter cycle, well, then we're going to do exactly the same. We're going to also talk about how long or short crypto winter. How long or short will this be a crypto winter? And should you be longing or shorting, i.e. buying or selling, in the crypto winter? And I mean, I think we got to get some perspective. I think the perspective is that we actually have been in a crypto downtrend for about 3 months already. So people are talking about whether or not we are in a crypto winter. I think they're asking the wrong questions, because there's no doubt that we are in a crypto winter and that we have been in a declining cycle with, as you can see, lower highs and lower lows. And this has been going on for about 3 months already. And I think the better question is not whether or not we are in a crypto winter, because we clearly are in a crypto winter. The questions that you should be asking are, how long is this winter going to last? How are we going to keep our portfolios intact? What should we be doing in this crypto winter? Is there anything that we can do right now and trade right now that is actually making money and is backing the trend of the crypto winter? Because there are a whole lot of tokens that are actually backing the trend of this crypto winter. So we're going to look at all of those things today, because asking whether or not we're in a crypto winter, I think, is futile, because everybody knows that we're in a crypto winter. Everybody knows that we're in a crypto winter. You can see that over here again and again and again. I'm going to close these windows now because I think everybody knows about it. Well, you need to think to yourself that when Bloomberg is calling a crypto winter, everybody knows that we're in a crypto winter. And in fact, I think Carl actually made a very good article for us, or a very good tweet, where he plotted the last bear market, in the last bear cycle, when did the crypto influencers, when did the YouTube tiles start changing into crypto winter? So if you look at the last bear cycle that we had, which started around May or late April, it was only around mid-July or July where the crypto influencers, including ourselves, started to talk about how long will this crypto winter last, bear market, how low will Bitcoin go, crypto bear market here. And so generally what you find that in a crypto winter, by the time the narrative turns into winter, it's pretty much too late to be exiting your portfolio. Because if you're exiting when you're reading all these narratives around crypto winter, it's probably too late to be exiting. And you can see that based on this indicator here, which someone here calls the Carl indicator. I think it's a shit name, but I think the idea is quite good. By the time the narrative starts to switch, it kind of means that people have been so slammed that they feel like they're in a bottom. And specifically when the mainstream media narrative changes into crypto winter, by that time, you know for sure that it's very much too late. And usually, I mean, there's no hard and fast rules here, but usually when people start talking about a crypto winter, it is near the bottom. And you can see the last time that this happened, when people started talking about a crypto winter, it was actually a bottom. I mean, we maybe got bottom to the same time again, but it was a crypto winter nonetheless. So believing these narratives or buying or trading out of now because you've seen the narrative is probably too late. And what you should probably be asking yourselves now, if you're in the market, you need to be asking yourself, well, how long is this winter going to last? And to do that, what you need to do is you need to be asking yourself, what is causing this winter? What's causing this winter? How long do we think this winter is going to last? And then once you have the answer to that, then you start asking yourself, okay, well, what can I do to hedge my portfolio against this? Should I be buying NFTs? Because it does seem that NFTs are completely backing the trend. And I found one tweet which really talks to the same narrative that I'm buying into when it talks to crypto winter, and that's Ari Paul's tweet. Ari Paul said, "My best model on crypto markets is that we're kind of 4 to 12 months into a relatively mild winter." So this is where it gets quite interesting. He's saying we're 4 to 12 months into the relatively mild winter already. And he says 4 to 12 months because different themes topped at different times, more dispersed than in previous cycles. You could use grayscale premiums as one negative, the grayscale premium, when the grayscale premium went negative to mark the start of the bear market. That could have been the first indicator, and that is when retail pretty much lost its appetite for Bitcoin, and that is when the grayscale premium went negative. And that happened actually quite early last year. Retail inflows probably peaked Feb to April last year. Yes, many assets made new highs after that, but taking crypto as a whole, I'd call it a rounded top between February and November. So he said instead of this blow off top, we kind of had this like rounded top, which started happening between February and November. I think we'd likely gotten an extension to a new all-time high that would have looked like a minor blow off top in Q1 2021 or Q4 2021 or Q1 2022, if not for the macro tightening and global risk asset sell-off that cut off the last innings, the last inning or two of the 9-inning baseball game. And that refers to the stock market. And if you look at the stock market, we are now riding the contagion of the stock market. And now the stock market is starting to have a little relief bounce. And it was the relief bounce that the stock market had on Friday, which brought us to this relief bounce that we had on crypto. But only crypto didn't hold the relief bounce. And it looks like the tech markets, the NASDAQ, is certainly holding its 0.6 or 0.6% up or 87% points up. And we're riding on the coattails of that. So it says, consider the DeFi basket, which is measured by the FTX perpetual, for example. When did DeFi bull run end? In my opinion, nothing in this thread is bearish. On the contrary, noting that crypto as a whole is kind of, well, into a mild winter that is starting to look for value cautiously. So it's saying, look, we're already at that winter, which is starting to look for value cautiously, which is, again, in line with what Kyle said. So if you look at what Kyle said, we're already in the winter, and we probably should be looking for value somewhere over there. And the reason why I use YouTubers is because they are the ultimate gauge for sentiment. They are the ultimate gauge for sentiment. And if you look at the sentiment now on YouTube, the sentiment is down, and you can see that what he's saying is we've probably been down for a while, but now we're almost nearing the bottom. We're almost nearing the bottom. And so he's starting to look for value cautiously. I don't have much to offer as a forward-looking statement or a prediction. Everything I look at suggests this kind of a middle-of-the-road entry point, not an ideal bottom of bear entry, but nor is it dangerous late-inning entry. Macro matters. If global equities tank 30%, crypto will be down substantially, and vice versa. If equities rally, we can expect macro is flat. If we assume that macro is flat, I expect ranging of the markets, possibly a very broad market. A huge amount of cash was raised by crypto institutions in Q4, and then, of course, that cash obviously has to be deployed at some point. That cash helps to provide a floor to prices. If macro doesn't collapse, that cash will look to buy value, because what you got to remember is that fund managers get paid on the returns that they generate. Fund managers don't get paid to sit on cash. So if fund managers are sitting on cash, they're not making money. So they have an incentive to start investing in the market. And there was a huge amount of crypto capital that was invested into funds. And those funds now have to start deploying their capital. So if those funds are actually starting to deploy their capital, well, that means that as long as the macro environment stays flat or maybe up, well, all this money has to go into crypto. And we did speak about that in one of our previous shows where I showed you all the money that has flowed into crypto. Similarly, in the current macro psychological climate, extreme rallies likely to get sold into by bag holders. I'm sharing my thoughts at high level. All of this is a low conviction, simplified mental model. And as always, I'm guesstimating what may be wrong about everything. That's quite deep. That's too deep for me. An important thing to note, however, bearish however bearish markets get, it won't be a winter in building. VCs are flush with cash. Projects raise massive ecosystem funds. There's enough cash to hire tens of thousands of engineers, cryptographers, biz dev, biz people. So what he's saying is that there's so much money that's been raised by projects and by VCs that regardless of what the prices reflect, the building continues. The building continues. Now, this reflects the views of Dan Moorhead from Pantera Capital. So Dan Moorhead is he's one of the heads of Pantera Capital. Pantera Capital is one of the largest crypto funds out there, one of the real visionaries in the space. And what they showed is, as part of their newsletter, they showed the Bitcoin price as a function of usage demand. And this talks about the Bitcoin adoption curve around the price. And what you can see is it kind of hovers up and down above this line. And ultimately, what he's saying is we're still in the early innings of a multiple decade transformation that positively impacts billions of people around the world. We are still in the early stages of blockchain technology, disrupting almost every industry in the world, creating new industries. And ultimately, what you're going to get is you're going to get markets pivoting from oversold to overbought. We were overbought before. Now we're probably moving towards oversold territory, depending on who you believe. But either way, the market is going to keep going up and to the right. And these are all short-term kicks. And if you believe in that theory, then basically you're starting to believe what this Mudrex smart crypto investing say. And they say, why crypto simplified? Why should you look forward to a bear market? Most investors want to be part of the price of their. Most investors would want the price of their invested assets to go up all the time. However, financial markets seldom allow linear trajectory. The current scenario across the crypto is testament to this. A few months back, Bitcoin went past 68,000, breaking past its previous all-time highs. Many people who entered Bitcoin in 2021 had the expectation that Bitcoin would keep going higher and eventually break the $100,000 mark. Tourists that come here in the bull market and want the prices to continue going up. And those are the people that you pretty much want to get flushed out the system. Seasoned investors always attribute bear markets to being the creators of generational wealth. This is where we're different from other people. We said to you that you should be looking towards the bear market. Why? Because seasoned investors, smart investors, look forward to bear markets because this is when we can make generational wealth. If you invest correctly in the bear market, you get to reap the rewards in the bull market. Tourists come here at 68,000 wanting 100,000. The smarter investor comes in here at 35,000 and says, I'm placing my bets for the next leg up of the bull market, which is inevitable as more and more people actually start to use the technology. So it becomes a longer term game. Here are a few reasons why one should look forward to a bear market. During the COVID crash of early 2020, ETH was above $200. That was less than 2 years ago. By September 2021, ETH was trading above $4,000. The use cases of ETH remain the same today as it was in 2020. I want to say that that's wrong. The use cases of ETH are actually more today than they were in 2020 because the technology is advanced so much. However, the bear market, which separated the tourists from the settlers during the bull market, however, it was the bear market that separated the tourists from the settlers. During the bull market, everyone is an expert investor. Bear markets show which investors actually have conviction to stay put, who the smart investors are, and who the other investors are. It's easier to separate the noise during the bear markets. Almost everyone is an investing guru, handing out advice during the bull run. Projects emerging during a bear market are often more likely to have good use cases and likely to stay the long term. In a bull run, every other NFT project and random token would go up in value. It becomes difficult to evaluate a project for what it's worth. And lastly, the market works in cycles. If you've survived the bear market, you will thrive in the other market cycle. In the words of PB Shelley, if winter comes, can spring be far behind? That is exactly what we're saying. And so what you've got to be doing is you've got to be using the bear market. You've got to decide, are you here for the long term? And I guess that if you are here and you're watching the show, you separate yourself from the majority of people that were here for the bear market, for the bull market, for the calls in the bull market. If you're here, if you're in crypto, if you're consuming crypto content every single day in the bull market, in the bear market, then what you're doing is you're positioning yourself correctly to reap the rewards of the crypto summer and the crypto spring, which is inevitable after a winter. Never in the history of crypto have we seen a winter that lasts forever. In fact, we've had a summer that lasts forever with a couple of little winters in between. But ultimately, if you look at where we're going upwards and to the right. And that's a trajectory that we want to be on. That trajectory ain't going to change. It ain't going to change now because of the Fed slightly tightening their marketing policy. That's not going to change the fact that blockchain is about to disrupt everything. We're still going to need layer one power, lots of layer one power. That's not going to change because the Fed is increasing the interest rate by 0.25 or maybe not 0.25. So ultimately, you just got to change your lens and you got to start thinking like a long-term macro investor as opposed to a tourist that comes here for the 2 or 3 months of the blow of top of the ultimate bull market. And if you did get in, and if you were a tourist and now you've become a long-term investor, great. Now you got to sit it out and you got to do a few things in your portfolio to make sure that you survive this bear market. And I don't want to spend too much time talking about what it is that you need to do, but ultimately we have spoken about it before. Well, one, you need to be positioning yourself in quality only. So make sure that you've only got quality in your portfolio, because if this is an extended bear market, rest assured that all the shit projects are going to die. All the projects that don't have adoption are going to die. Rest assured that all the projects that don't have real funding and real ecosystems around them, they're not going to survive an extended bear market. But if you look at a project like Ethereum, or you look at a project like Luna, or you look at a project like Solana, you know that even if this bear market is 18, 24, even 36 months, even 48 months, you know that they're going to come out the other side. And don't worry, the bear market's never, ever, ever going to be that long. We're talking about a couple of months, like Ari Paul says. He says, we're in the middle, we're in between month 4 and month 12 of a very mild crypto winter. And it is a very mild crypto winter. It is a very slow, mild burning crypto winter. So you got to position yourself to make sure that you come out of this and you do it well. What do? Well, one, you sell all your shit. You switch all your shit into really good stuff. I've said it before. You use your tokens to mine more tokens. So if you've got Ethereum, stake Ethereum, get more Ethereum. If you've got Cardano, stake Cardano, get more Cardano. So that when you come out into the bull market, if you had 100 Cardano and you earned 5 Cardano during the time staking, you've now got 105 Cardano. And if the price goes from $1 to $2, well, you've doubled on 105. So you want to be mining your tokens and you want to be making sure that you get maximum return on your stablecoins. That is what you want to be doing in this bear market. Now, it may die, it may continue for a month, it may continue for 3 months, it may continue for 6 months. My personal point of view, we're near the end. I think there's another month, maybe 2 months. I think the Fed needs to get inflation under control. I think that they're going to publish the Feb numbers and they're going to show that inflation's come down. They're going to publish the March numbers. They're going to show that inflation's come down a bit more. They're going to increase interest rates. Bang, in April, interest rates are slightly higher. Everybody is used to this new interest rate cycle and inflation is pretty much coming down and the market starts to believe that the Fed's got this under control. And then we're back in a raging bull market because there's still so much money in the economy and it's got to go somewhere. The stock markets start to recover and then the markets, the crypto markets start to follow them. So that is effectively what our thesis is, and that is effectively what you're going to be doing. At the same time, start looking for signs on-chain, fundamental signs, to see whether this market is broken or whether the on-chain fundamentals are good. And to that extent, I looked at the on-chain fundamentals, and I look at the on-chain fundamentals every single day. And let me tell you, these are the healthiest on-chain fundamentals that I've seen in a long, long, long time. And I'll tell you why this is a healthy recovery or a healthy on-chain period at the moment. So for one, usually during prices, when the price is low, we don't get new retail buyers or small retail buyers coming into the market. When prices usually go down, the whales are usually the ones that are buying the coins off the new entrants. So one of the signs of a market that may take a long time to recover is when you've completely lost retail interest in the market. But that's not the case now. That's not the case now. The Bitcoin balance on exchanges is moving down to new lows, which means that people are buying Bitcoin and they're not leaving it on exchanges because it means that they want to be holding. So we're creating new hodlers. But who are these new hodlers? Because traditionally, these new hodlers were whales, people who've been in crypto for a long period of time, people who believe in the crypto thesis. Those were the people who were traditionally accumulating coins and taking coins off exchanges. But that's not the case anymore. That's not the case anymore. What we're seeing is a new phenomena in the Bitcoin market. We're seeing Bitcoin holders with 1 to 10 Bitcoin, so with a balance of 1 to 10 Bitcoin. So small Bitcoin holders have been stacking since the 2021 summer crash. What is interesting is they're still stacking now, unaffected by the current dip. So it's one of the first times since I've been in the market where, despite the price going down, we're now getting new hodlers of Bitcoin coming in. And what they're doing is they're not just buying Bitcoin, but they're buying Bitcoin and they're taking Bitcoin off exchanges, which is a new phenomenon. And so what we're seeing is that what the retail investor said is they said, look, when Bitcoin comes down, I'm going to start investing in Bitcoin. I'm not going to start running away from it because I'm scared that Bitcoin is going to die or that crypto is about to fall into a heap. I'm seeing value in Bitcoin and I'm buying the value in Bitcoin and I'm starting to take it off exchanges and starting to store it and starting to store it and starting to store it. That is what's happening in the market, and that hasn't happened for a long period of time. And so, to me, when I look at the on-chain fundamentals, and I look at a lot of other metrics. I mean, I do look at the charts. I looked at Tech Dev, who says if you look at this, he says you get a macro impulse, you get a correction, you get a macro impulse, you get a correction, and then you get another macro impulse. That's what he's saying, and he's saying, I started following this man not long ago, and he gives you the whole thesis around this macro impulse correction, macro impulse. I also looked at this chart over here, the unrealized profit and loss. We can see despite the crypto crash, we haven't dumped capitulation or fear zones like in previous bear markets. We also haven't hit the euphoria zone in the cycle. So we could say that the top is not in, and we're simply accumulating, which again talks to this theory of retail holders coming in and not actually running away from the market. What you got to remember is that when a market capitulates, people run away from the market. When a market is crashing, people run away from the market. You don't want to be involved. Even in crypto, even people who've bought crypto, when a market capitulates, you don't want to be in that market. Even we feel like that sometimes. That's not what's going on today. That's not what's going on today. We're getting new hands buying Bitcoin at an increasing rate. As the price goes down, small entities are buying, big entities are buying, the biggest entities are buying. They're taking the Bitcoin off exchanges. So it's going to take a lot to convince me that this is the end of a bull cycle. To me, I'm in the tech dev camp. The tech dev camp says that when we are going up here, we're getting a little correction before macro impulse, and then another little correction before macro impulse. And that's exactly the school of thought that I'm going into here. Remember one thing. The majority of people that have large accounts on crypto, Twitter, a lot of people that have large accounts on crypto Twitter are people that have been here since 2014, 2013, 2016, 2017. We survived a lot of crashes. Historically, before the macroeconomic money pumping into the system, crypto did go through short bursts in summer with blow-off tops and then long winters. And so the reason why bigger accounts on Twitter are scared of long winters is because you can kind of say, as per this tweet, everywhere I look, it's post-traumatic stress disorder. It's PTSD. And that is because the biggest accounts know that historically when they've had a crypto winter, the crypto winter can go on for a year, 18 months, which is what happened in 2017, or even before that when you look at 2014, 2015. So you get these big accounts that have this PTSD. They're worried about an extended bear market, and that's really where that narrative comes from. I do think that this time it is actually going to be different, and that is because people are actually starting to use the technology. So that's my thesis. Question is, how do you protect your portfolio? Do you think that maybe NFTs can protect your portfolio? I don't know. There is a good reason to believe that NFTs can protect the portfolio. I just see stories have dropped on Crypto Banter. There is a story here about Anchor Protocol. I want to talk about that Anchor Protocol story. I have to talk about that. Love this morning crypto brew with the NFTs are at the top. Maybe we should talk about the NFT top now. Go and catch these stories on Crypto Banter. I think what we're going to do from tomorrow is we're going to start introducing 24-hour stories and 12-hour stories. So we'll post a story 24 hours later, it will be gone, like Instagram. Get people to get the alpha. If you're there first, you get the alpha. If you're not there first, well, then you won't get the alpha. Anyway, let's talk about this. So can you protect your portfolios with NFTs? Because there's this big narrative going around right now that says we can protect our portfolios with NFTs, because if you look at the NFT market, well, the NFT market is exploding, as you can see, even though the crypto market is down. So even though the crypto market is now at the lowest rate of the lowest interest in the crypto market and the prices are going down, that's not what's happening in NFTs right now. OpenSea flipped Uniswap to become the most utilized product on Ethereum. I mean, get this. So you're talking about Uniswap, which is the decentralized exchange which controls the majority of the volume on Ethereum, and OpenSea has now flipped Uniswap. So what they're saying is NFT volume or NFT interest or NFT trading is now flipping token trading. More interest in NFTs than there is in token trading. Huge stat. Coupled by the OpenSea monthly NFTs sold. Look at that. The highest number of monthly NFTs sold in NFTs. Alex Becker thinks that this NFT season is about to pour into gaming and the metaverse. So he's not talking about any kind of blow off top. But I think it's super important for us to differentiate or to look at the signs and to find out and to ask some very important questions. Like the first question, can NFTs actually be the next play and actually protect your portfolio? Are NFTs a hedge against the crypto market? Are NFTs the ultimate hedge against the crypto market? Is this going to be the point where the crypto market goes down and NFTs and information and interest in NFTs goes up? Could this be that cycle where the NFT markets that continue to go up and the crypto markets go down, or are NFTs just heading for a blow off top? That's the big question. And if you look at the top signs, so Alex Becker says this NFT season is all out and it's about to pour into gaming and metaverse. And then there's also the other narratives of like, you're still early, zoom out a bit, there's 7 billion people in the world, less than 3 million people have bought NFTs. But then there's the other side of the narrative. And the other side of the narrative is the NFT market is starting to feel and look toppy. It's starting to feel and look toppy. So on the one hand, NFTs may just become the hedge. This is their moment. They may break out of the crypto trend and they may continue to go up as crypto goes into winter. Or it is what Chris Burniske says. And he says NFT volumes and prices in January have been strong. Many say this shows how everything in crypto may not crash simultaneously again. One could also say NFTs are the furthest end of the risk spectrum, the most illiquid, and so the last to pump, with the euphoric gasps of a dying bull market. So what he's saying, he's saying because NFTs are the highest up the risk profile, and because they're the most illiquid, they may actually be the ones to crash the last. And you are seeing some crazy top signals in NFTs. You're now seeing Justin Bieber, who bought a Bored Ape for 500 ETH, which is way above the floor price for ETH. And it does feel like there's this whole trend of celebrities that are buying these NFTs. They're buying and buying and buying these NFTs, and they're paying inflated prices. And every day we're starting to see more of these NFTs. And what we're doing now at Crypto Banter is we're starting to investigate what is the celebrity trend. Because a lot of people have started to talk about, someone here on Reddit said, anyone feel like celebrities may not actually be buying these ape NFTs? And if you track it back, all the buying of these celebrity NFTs, not all the buying, but a large amount of the buying of these celebrity NFTs are from this MoonPay company, or MoonPay is doing the buying for them. And what you can see is we have a couple of questions for MoonPay and ISO to write. And it's concierge service that a lot of celebrities have already seen to have used to purchase some high value NFTs. We created a non-exhaustive list. Now we're doing an investigation as to what's going on here. That investigation will be dropped on the Crypto Banter website. But you got to be careful, because usually when we see celebrities buying in and the narrative starting to go crazy, it does mean that we may be getting into euphoria stage. So if Chris Burniske is right, then we could see that NFTs are like the last gas pump of an illiquid market, of a dying bull market. It could be. And let's just unpack it a little bit. He says, this doesn't mean NFTs aren't important. They are. Those that were around in prior bulls know that the riskiest, most illiquid things pump last in crypto. In 2013, Litecoin had its dying euphoric gasp top weeks after Bitcoin. In 2017, Bitcoin peaked, then Ethereum and altcoins peaked. In 2021, Bitcoin and Ethereum peaked, then the illiquid, smaller alternative layer ones, and maybe that happens and then NFTs go next. Another way of thinking of it, is the Bieber signal a signal of strength to come, or is it a signal of the end? But I don't know, maybe PsyOps, if Bitcoin can prove a bottom here and there's not more macro chaos, that could lead to a sell everything market, we may be all right. So his theory is that NFTs are the last pump of a euphoric bull market. Alex Becker thinks that the NFT bull market's about to go into metaverse and gaming. And Elio, who is another one of my oracles, says NFTs may enter euphoria in February. Make sure you stay liquid and cover your initial buys if you're up big. JPEGs can go to 0. Okay, so that's what Elio says. So big question, are NFTs a hedge? Well, they might be, but we don't know. Right now, they feel pretty toppy. This could be the moment where NFTs completely break away from the crypto market and start their own narrative, or this could be the last gasp of a dying bull market, and Chris Burnische's right. Be careful. Play it accordingly. Don't put all your money into NFTs right now because you think that NFTs may change the narrative, no matter what any YouTuber or no matter what anybody else tells you. No matter what, don't put your money into NFTs because you think there may be a bull market. And if you are up big, just in case the narrative is right, just in case we are at the top of a bull market, well, take some profits. Stay invested with some, but take some profits, because the last thing that you want to be doing is holding fancy JPEGs that you paid a lot of money for and are worth nothing. That said, of course, we are super bullish on NFTs. I think NFTs is or are the most exciting technology that we've seen in a long time. And that what we've seen now is just layer one. We've got play to earn gaming, which is killing it. We've got metaverse. So long term, I think the bull market will do well. Just be careful if you are holding NFTs that you're not the one holding the bag after this euphoric blow off top. Alrighty, that is the next thing that I wanted to talk to you about. Then I want to talk to you about this chart over here. Sheldon, let's get the Luna chart up.
Let's do it, brother. Important chart. I'd love to hear what you're thinking. It's reacting very well at this point. Is this an absolute bargain for Luna right now? I'd love to hear your fundamentals will help a lot with charting.
Take me through the charts. Take me through the charts here. First of all, show me where it is and show me what we need and show me what the fibs say if we break this level.
Yeah, so what we had is obviously we've lost a little bit of steam, but this can be, exaggeration at times with trend lines. That's why if it breaks back into trend, it's still the continuation of that. But what is very interesting with Luna, and I spoke about it 2-3 weeks ago, is we're obviously waiting for two very big signals to say, Luna's at really key levels. And that was obviously the weekly stochastic completely bottoming out now, and this is one that doesn't happen very often. Last time it did happen, we were sitting around $7. And now we've just hit, the very much oversold territory on the weekly, which is great. I then took this whole impulse wave that we had and I just ran a fib to it. And we've literally bounced off golden ratio right now. So we do have the little thing of trend, but this isn't, it's a break of trend. The only difference is, Bitcoin's been in a downtrend for the last two months. So for me to say, like that this is a really worried zone when the whole market is at an oversold position. You know what I mean? A bounce up can come at any point. And now we're sitting with Luna sitting at the 618 golden zone, and we have the daily stochastic oversold just crossing to the upward side, as well as the weekly. Now I'd love to hear the fundamentals because this could be a really good bargain for Luna. I just want to hear obviously your side with what all the news that come out. How are you feeling about the whole thing and what have you got?
Okay. So this is amazing. And I love the fact that you've been talking about the chart. And I must say, even more than that, I love the fact that we're doing shows together because I think this is the magic.
I missed it. I missed
Yeah,
it.
I think that guys, let me know whose sound you prefer. We're testing a new microphone with Sheldon. Just tell us which microphone you guys prefer, mine or Sheldon's, in terms of how it sounds on the other side. Let us know in the comments. Okay, let's look at Luna. So why is Luna coming down? Why is Luna coming down like this? And there is now all of a sudden a hell of a lot of FUD on Luna. Okay, so let's look at the FUD. Miles Deutscher, who is possibly, maybe, I didn't say this, but probably, maybe, potentially coming to Banter. Potentially coming to Banter.
Fingers crossed.
Fingers crossed. Says the coordinated FUD against Luna is giving me China bans. And there has been a lot of FUD against Luna. And unfortunately, we've had two incidents that have pushed Luna down. The first incident that pushed Luna down was last week's Wonderland, Spell, Time, Daniel Sester scenario. And the reason why that pushed Luna down is because Magic Internet Money was highly, highly, highly geared to using UST. And when people started to take their money out of Magic Internet Money and unwinding their positions and leaving the Spell protocol, the Abracadabra protocol, well, that had a risk of reducing the use case for Terra, which is what the stable coin on Luna is. So remember that the more Terra that are minted, you have to burn Luna and that drives the Luna price up. So if you want to mint more Terra, the more use cases you create, the more Terra that you create, the more Luna you have to burn to create them. If you want to create $100,000 worth of Terra, you have to burn $100,000 worth of Luna, and you do that by buying Luna on the market and burning it. Okay, so people, I didn't ask you who's got a better voice. I asked you which microphone sounds better. I didn't ask you who has a sexier voice. We can have that discussion tomorrow, not today. I asked you which microphone sounds more crisp. Okay, to me, it sounds like Sheldon is in a bucket, but I mean, you guys tell us. You guys tell us. You guys tell us. Okay, so what are the FUD? The first thing is the Wonderland protocol, the whole Daniel Sester debacle last week caused a run on Magic Internet Money. And one of the biggest applications of MIM, or Magic Internet Money, was the Degen box. And the Degen box, if you guys remember correctly, I said it to you guys last time, the Degen box effectively uses Anchor protocol. Anchor protocol is a protocol on Luna, which we're going to talk about next, which offers you 19.48% return. Okay, so 19.48% return if you deposit UST. That is how Anchor protocol works. And we'll talk about that in a second. Now, what happened last week with Magic Internet Money and Abracadabra, money being pulled out of Abracadabra and Magic Internet Money, was the demand for this Degen box, which used to put money into Anchor, then borrow against it and take the money that they borrowed against it, and then reinvest that money that they borrowed against it into Anchor, and then borrow against it, and then reinvest it. That was called the Degen box. Well, the demand for that Degen box started to come down. And when the demand for the Degen box started to come down, people were scared that Terra would lose its peg because there would be no more need for people to use UST. And that was the scary thing, and that's why the price of Luna started to come down. The next part of the FUD against Luna is the FUD against Anchor protocol. And I really want to go through this FUD with you guys again so that you guys understand where the FUD is coming from. And then we'll talk about whether this FUD is actually justified and how amazing it is. So what is Anchor protocol? Anchor protocol is a protocol on Terra which allows people to deposit UST and earn 19.48% to deposit UST. And right now, today, there are $5 billion worth of deposits in Anchor that are earning 19.5% UST. You see that? Simple. Now, how do what do they do with the money? They lend people money. So if Sheldon has Ethereum or Luna, he can wrap the Ethereum in Luna, and he can deposit it into here and into Anchor. And whilst holding his UST, while holding his ETH and his Luna, he can borrow UST against it. Okay, so you can borrow UST against your ETH and your Luna. So if you've got ETH and you've got Luna, you borrow against the Luna. And if you look at it today, there are $5 billion of deposits, and there are only $1.2 billion worth of people who have borrowed.
Wow, okay.
So that's the problem. That's the disconnect. Because Anchor Protocol has got $5 billion of money that they are paying the investors 20% on. But right now, because the market is so dry and so quiet and there's not much demand for borrowing, the demand for borrowing is only 1.2 billion. And so they're only earning money on 1.2 billion, but they're paying on 5 billion.
Mm-hmm.
You see that?
So is that how the peg works, right?
So how does the peg work? They take the money that you deposit. So let's say that you deposit your ETH and your Luna, and they lend you 50% or 30% or whatever against it. So you deposit ETH and Luna, they lend you 50%. They take 100% of your ETH and 100% on your Luna, and they stake it. So on Luna, they're getting about 7%, and on ETH, they're getting about 6%. But they're getting it on 100% of your money, right?
Okay.
And they're lending you on 50% of your money, okay? And they're lending you at a rate of 11.78, okay? So you deposit 100% of your money. Say you've got $100 worth of ETH. You deposit $100 worth of ETH. They take that $100, they invest it, they get 6% or 7% per annum. They get $107 after one year. Okay? Yeah. They loan you 50.
And UST, right? Okay.
50 in UST. And you're paying 11 for loaning that UST. You're paying 11%. So what are they getting? They're getting 6% on the ETH, and they're getting 6 or 7% on your $50 times the 11%. And that is how they keep paying the payments. Now, in times where there is a lot of borrowing, they make a lot more money, and then they add money to what they call the yield reserve. And the yield reserve is what protects them and allows them to pay the fixed interest rate over a long period of time. But now the yield reserve is starting to run out. The yield reserve used to be at 70 or 80 or 90 or $100 billion, and it's starting to run out. You can see there's only $29 billion. And so in the next 30 days, this yield reserve should run out. So why is this such a big disaster? Because Anchor Protocol is one of the biggest reasons why people started to create UST. So if you look at this, $5 billion of the 11,288,000,000 UST that have been created are sitting on Anchor Protocol. And if Anchor Protocol cannot continue to pay this $5 billion at 20%, then people are worried that there's going to be less use for Anchor, for Luna. And people won't be that interested in Anchor, in Luna, because they can't stake it at 20%. That is why everybody's starting to panic. And they're starting to say, look, if Anchor Protocol can't continue to pay 20%, maybe people won't want UST. And if people don't want UST, well, then the price of Luna is going to go down because they're going to sell their UST. So here's a great thread. This is, I think, one of the most impressive threads that I've read. You need to follow this guy. I'm going to follow him now too. Does Luna have a problem because of Anchor Protocol? Is the whole Terra money system in danger? Full thread. It's a long thread, but it's well worth it. Trust me on this. So Luna generates value from the growth of the Terra ecosystem. So more demand for UST and the larger values Luna gets. The protocol which generates the highest demand for UST is without doubt Anchor Protocol. I showed you this. Out of the 11 billion, Anchor Protocol does half of it. Let's start with Anchor Protocol and how it works. Anchor is a protocol where you earn UST and you can borrow UST using your Luna and ETH as collateral. So wait, Luna and ETH as collateral. Okay, so you can use Luna and ETH. Very important. You can generate 19.5% by depositing your UST. Yield is generated from the borrower side. Interest paid by borrowers plus rewards from staking collateral. So the money that Sheldon paid to borrow plus the rewards they were getting on the B ETH and the B Luna. Okay. If Anchor Protocol earns more than it needs to pay for depositors, then the additional money is put in the yield reserve. If Anchor doesn't generate enough money, then it's taken from the yield reserve. The yield reserve is like an insurance fund, effectively. What's the problem? In July, around $17 million of UST were deployed to Anchor yield reserve with the promise that this is a one-time action which will give Anchor time to prepare new collateral types to add self-sustainable protocols. What are new collateral types? Solana. So right now you can only borrow against your ETH and your Luna, not against your Solana and your Avalanche and your everything else. And so remember, the more protocols that Anchor can let you borrow against, the higher chances that you'll borrow. Because if you don't have B Luna or B ETH, well, maybe you've got Solana and you want to borrow against your Solana, but you can't because Anchor protocol doesn't allow that. So now, the last 30 days, the yield was going down. The yield reserve was going down a lot, minus 1.5 daily. And that means that in the next 30 days, there may not actually be a yield reserve. A lot of this is happening because the Abracadabra scheme was enabled, the 100% APY, the magic, the box, the Degen box, the Abracadabra one that I spoke about. Okay. Okay, the Luna Foundation was capitalized by 50 million of Luna. Sounds like stablecoin wants to add part of this reserve to Anchor, even up to $300 million. So why is Anchor so important? Because Anchor is the tool that brings UST onto Luna. Why? Because when people know that they can earn 20% risk-free, well, what they do is they start putting more money into UST. So up until now, Anchor has been the most fundamental protocol to bring people to the UST ecosystem, which has driven the growth of Luna. But Luna can't rely on Anchor till the end of time. And so even though Anchor was an impressive, important tool, marketing tool, kickoff tool, startup tool, now the Luna protocol needs to start relying on other protocols. And there's about 200 protocols that are currently being built. A few days ago, there was an AMA with the Anchor team. During this talk, they revealed more information about Anchor version 2. The biggest change right now, Anchor wants to add it wants to add new collateral types, but it needs around 3 months to do it. After it changed it, it needs 3 days to load new collateral types. So you'll be able to borrow against your Solana and everything else. Still, the question remains whether Anchor protocol is going to be sustainable. Last year, a lot of new people feeling they discover something new. First of all, there's nothing about blah, blah, blah. I'm not going to go through all of this. I want to go through the important parts here. Okay, so here it is. Anchor protocol was the main factor driving the growth of Luna. That is why people came to Luna, because they wanted the 20% on Anchor protocol. And what people are scared of is that now that this 20% may be at risk, people are going to exit the Luna ecosystem and then Luna is going to go down. What I say to those people is, Anchor was the best marketing protocol to get people onto UST and to get them understanding the value of probably the only decentralized currency that has properly held its peg and is growing so aggressively. What's going to happen now is there are 200, 300 projects that are going to be launching on Terra this year, all creating demand for Terra. And so the demand for Anchor protocol, or the importance of what Anchor protocol is doing in the community, is not as important as it was before. And so people shouldn't worry that Anchor protocol isn't going to do it. Also, we are adding more collateral types to Anchor. We are adding Solana, we are adding Atom, and we are adding DOT, which means that people are going to borrow not only against their Anchor, against their Luna and their ETH, which is the only options that are available to you now. If you want to borrow, you have to stake your ETH or your Luna. But imagine what happens when we get DOT, Atom, and then a whole lot of Solana and a whole lot of other protocols here. All of a sudden, what's going to happen then is that the borrowing is going to go up, and the deposits may just stay the same or continue to go up, and you're going to get this realignment. And so what I think is going to happen is that they are going to recapitalize this yield reserve. I think that that's probably what's going to happen. Even though they said last time that it's the last time, I think they're going to recapitalize this yield reserve just to give Anchor protocol enough time to get these new protocols and continue in its cycle. That is what I think is going to happen. I want to just see if he finishes it off like that. Let's have a look here.
Well, that's what I was going to ask you. I was going to say, you know, if that was just a bit bigger, you know, it would obviously just give people a little bit more of a safety sort of thing. So I think that's definitely something going to work on. But one thing I do like, and I think what will rage massively, obviously, in a bull cycle is I love that you're borrowing a stable token. So if your collateral, your ETH grows and everything goes up in the market, you only borrowed a stable asset. So it means, you know, if ETH does a 30, 40% or anytime, so like I think it's really powerful strategies if you actually get into it. Like you'll see how your collateral will naturally overpower and you can pay back your loan and you're still sitting with all your ETH. Like it's a really good strategy.
Yeah. Alrighty, Sheldino. Chat to you later, my brother. Guys, don't worry about Anchor Protocol. I think Luna's going to be fine. I think Anchor Protocol is not such a big threat. I think Anchor Protocol will continue to function. It may pay out slightly less returns. Maybe it'll be 12% or 13%, which is what it can actually afford to pay out, you know. Or maybe they'll just recapitalize to keep money coming into the Terra ecosystem. Either way, it survives. There's 200 more projects being built on Luna, and there's nothing to worry about. Before I let you go, I do want to give a shout out to one of our sponsors, and that sponsor is Coinstats. The reason is I started to spend time using their system again. I'm trying to get up to date with all my accounts, with all my crypto accounts. And the only way to do it, I don't know about you guys, but I struggle to find a place where I can see all my wallets and all my exchange accounts in one place. Like, where do you see all the money that you got in every single one of your Ethereum wallets, your Solana wallets, your Avalanche wallet? Where do you see it all in one place? And that's today I started to just update all my portfolios. Now, this is a dummy portfolio, so don't even look at this. It's a small portfolio, dummy portfolio. But what I want to show you is how important it is, or how easy it is. You can just go to Coinstats. You can link your Binance, your MetaMask, your Trust wallet, your Exodus wallet. You can link them all here. And then what you do is you get one view of your entire portfolio in a day, no matter where your portfolio sits. I don't know if you guys have ever had that need, but for me to track all my wallets and all my accounts and my exchange accounts and to see what I've got in them, this is the one tool that I must say I haven't used enough, and now I've actually started a big exercise. So wanted to give a big shout out to our sponsors. Guys, I'm back. I'm using the product because I simply realized that I have to use this product. If you guys want to use the product, there's a link below. I don't remember how much it costs, but I can tell you it's like peanuts. It's like, I don't remember the numbers, but it's absolute peanuts. So what is it, like $5 or something? What's the number? It's like $5 or something. It's like that's how cheap it is. But try and use it, especially if you have the same problem that I have. Okay, we also said that we're going to do some Bybit. We got 1 minute to choose some winners for today, and I'm not going to show you. In fact, I'm going to hide this column here. I don't want to see the amount that they deposited. All you need to do to get this is you need to deposit money into your Bybit account. Doesn't matter how much. Today's winners are these three over here. 767 6717 818 4228 774 5950. You guys are the winners. Let me just color that in so we don't forget who the winners are for today. $1,000 worth of BitDAO tokens are coming your way. $1,000 worth of BitDAO tokens are coming your way. Let me just make that black. I will see you guys again tomorrow. Before I go, I just want to wish my Chinese and our Asian viewers a happy new year, year of the tiger. Maybe the tiger can kill the bull. Yeah, maybe the bear. Maybe the tiger. Maybe the tiger can kill the bear. Maybe the tiger can kill the bear. Guys, I'll see you guys again tomorrow. Until then, trade well, my friends.